it's Rob. Welcome to the Everyday Investor, the hottest investment show in the world. That's right, I said it. I don't care who knows it. This show is designed to help us grow our money. Everyday people teaching everyday people how to grow our money. You see, the challenge often is that we take our precious time, we go to work, and if we have a job, we are blessed, but we go to work, we get paid in order to eat. Let me say that again. We take our time, we go to work, we get paid in order to provide. But imagine a world where money could make you money. You could work a little less, take that time, and spend it with family, friends, engaging in a purpose that's greater than yourself. That is what the Everyday Investor TV show is all about. Don't go anywhere. We'll be right back. Coming up, we're talking to Scott McGillivray, and he's teaching us how we can make money investing in a real estate fund.
Long-term solves everything in real estate because real estate's going to go up over the long term. All this inflation that's happening, that will have an impact on housing prices in the long term. Prices go up, wages go up. All of that translates to a higher cost of living, a higher price point for properties.
Hey, it's Sarah Larby here. Did you know that if you are selling your home or investment property, one of our preferred agent partners will sell it for you for free? That's right, zero commissions. Head over to our website, everydayinvestor.com, to find out more.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey, it's Rav. A few years ago, I learned how to trade stock options by taking the Theta Trading course. My son, my friends, myself, all of us benefited immensely by applying their strategies, and I want you to have that same benefit by taking their course as well. I'm not receiving any monetary benefit whatsoever by telling you this. It's just that, as you know, I believe that knowledge mitigates risk. Visit their site to find out more. Hey, it's Rav. Welcome back to Everyday Investor. Super excited to have my buddy Scott McGillivray on the show. Scott, thanks so much for taking time out of your busy schedule. I mean, I think you're doing a reveal right now for one of your shows. And so where's the crew? You told them to grab lunch or something, or?
Yeah, I told everybody to get a 25-minute break while my buddy Rav and I talk shop about real estate.
Yes. So, you know, I've been fortunate to have you on the show for many times. And Scott, can you believe I'm going into my 19th year of teaching real estate investing on TV? Of course, one of the best, if not best, education platforms outside of TV is KeySpire. And, you know, really grateful that I got to work with you and Michael. And you know, how's that going? How is KeySpire doing right now? And then we're going to obviously talk about the McGillivray Fund. But talk to me about KeySpire.
Yeah, there's a lot going on in the real estate space. I mean, I think I've been saying that for 20 years. There's a lot going on in the real estate space, but there's a few, I guess, trends that are fairly new to most investors that we haven't seen for a long time. Rising interest rates, inflation. We're seeing a lot of people a little bit nervous in the space. We're starting to see prices move around, but there's a little bit of everything. There's still some bidding wars. There's still investors who are thinking that this is a nice time to capture something at a reasonable price. But listen, I've been a real estate investor for over 20 years. I've been teaching people real estate investing for 15 years through KeySpire, which is our real estate investing network. I would say a few years ago when COVID first started, we started doing everything digitally. I started doing online master classes and webinars. Those are still in high demand. So I'm updating and doing new master classes all the time. And we're getting great attendance, thousands of people every time. And it's because people are hungry. They're thirsty for information. They need help navigating this space because it has changed so much. But the good news is those who understand what they're doing, and Rav, I know you already know this, but this is probably one of those times we're heading into right now, one of those times where some of the biggest opportunities are going to be available for those who are strategic. For those who don't know what they're doing in real estate in a time like this, it can be devastating. They can make some big mistakes, and they can start taking on some amateur moves that don't do well in the long run.
Yeah. No, I mean, we say it all the time. I mean, knowledge mitigates risk. Knowledge breeds confidence. You do need to educate yourself. We just can't listen to, Cousin Vinny, and because he tells me what to do or he's doing it, doesn't mean that it's the right thing. I mean, you read the headlines, how many different investment companies, if you will, these so-called gurus are going belly up. Like, you have to be very, very careful. Real estate generally is pretty forgiving, but at this moment of time, we really need to understand. And so, yeah, what are you doing then? Share with us what's kind of the niche that Scott is in right now during these interesting times.
Well, I think, you said it, that real estate's pretty forgiving, but in the long run, it's fruitful, is what I like to say. The long run, long term solves everything in real estate, because real estate's going to go up over the long term. All this inflation that's happening, that will have an impact on housing prices in the long term. The prices go up, wages go up. All of that translates to a higher cost of living, a higher price point for properties. So there are great opportunities to get in now before all of that is absorbed by the real estate market. The challenge is, and the thing that's holding people up, is interest rates, because the cost of financing is getting dangerously high for those who aren't either locking in or doing some sort of mixed investment opportunity when it comes to acquiring their home. So you do have to be very careful with where you're getting your money from right now and what the interest rates are that you're paying. And what we typically see when interest rates go up is rental rates go up as well. And I think a lot of people forget that real estate investing, if you're a serious real estate investor, a wise man once said to me, it's not about timing the market, it's about time in the market. And the reality is, if you get hyper-focused on one piece of the puzzle, you're going to miss the big picture. And although interest rates are going up, prices are stabilizing, but rental rates are going up. And at the end of the day, it's about cash flow, right? If interest rates go way up, but rental rates go way up and housing prices go down, I don't care. If housing prices go up and interest rates go down, I don't care, right? As long as there's a balance there that allows me to have positive cash flow, the real goal in real estate is about time in the market. So as long as I have a way to cover all of my costs and put a little extra cash flow in my bank account, it's that long-term passive appreciation that's going to turn you into a millionaire. It's not the rental income that's going to turn you into a millionaire. It's what the rental income allows you to do to build that portfolio. And I didn't understand that on my first property. I was just going for cash flow, trying to create income. Even on my second, third, even my 20th property, I was still focused on cash flow, which was a great accident almost, I guess you could say, because the cash flow is what saves you. It's your safety net. I didn't realize that I was a millionaire until 5-6 years into real estate investing. And I was refinancing mortgages on properties I bought for $150,000 were now worth $250,000, $300,000. Today, those properties are worth $1.2, $1.3 million, each one of them. So, experience brought the concept to life for me. What I thought was happening has actually happened. But right now, it really is going to be about the few who know what to do right now are going to make all the money while everyone else is going to feel paralyzed because they're going to be hyper-focused on interest rates, or they're going to be hyper-focused on inflation, or they're going to be hyper-focused on any negative news that's in the media, which we know is just a distraction, and they're not going to be looking at the real numbers. So at KeySpire right now, what we're trying to do is we're trying to help people focus on what are the real numbers looking like? Where are the biggest opportunities? What are your financing options? And it is amazing how many of our investors right now are picking up properties at discounts to what they would have been a year ago. They're not having the same bidding wars, which is fantastic. And we're focusing on those markets that are positioned extremely well for future growth. So this is the time, although most people right now will be paralyzed with their investments, they're just going to be sitting there and doing the whole wait and see, which is a huge mistake. Because I can already tell you what wait and see is. Wait and see if you want to just keep your investments where they are. If you want to keep your savings in your bank account because you think they're safe and you want to do nothing, then you are guaranteeing yourself a negative 7.5% rate of return, because that's what inflation is. And if you do nothing with your money, it has gone down by 7.5%. Smart investors know that with inflation and with rental rates going up, there's a huge opportunity to be on the positive side of earnings. So doing nothing is a guarantee. Imagine someone said, I can guarantee you a negative 7.5% return on an investment. You'd be like, I don't want to touch that. But then people do nothing, and that's exactly what you're doing. So it is a confusing time, and we need to re-educate people because it's been about 25, 30 years since we've seen conditions like this. And we know that it's in a time like this where people will make the best moves in their investing career that will set them up for success in the future.
Yeah, no, good stuff. And I love that you always talk about the long game. So what I appreciate about you is, yeah, it's not fly by night. It's not here's the latest thing, the nice shiny sexy gadget. We're in this for the long run. I love you guys. I love that you teach this, and we're going to take a break here in a second, but I want to hear about the fund, because you have a real estate fund. We call it the McGillivary Fund, and I want to know, how did that come about? I mean, I know how it come about. Everybody, hey, Scott, can I invest with you? Can I, piggyback, so on and so forth. So you created this, but let's take a quick break, and then we come back. Let's dissect it. We always go through the numbers. For those that you're watching, we'll talk about what's the return on investment. We'll talk about when do we get that return along with the money that we put in, what's the minimum needed, and also what is the downside, the risk. Don't go anywhere. Privileged to have Scott McGillivray on the show with us. We'll be right back.
Happy New Year to everyone here at Everyday Investor from us at First Access Condos. Now, those of you that follow us know that we start January off right with the best projects of the year. And 2023 is that kind of year. I am bringing you a project over 50 stories tall, close to 600 units, 20,000 square feet of amenities in the heart of the city, not near a university, but on a university campus. Centricity Condos, northeast corner of Church and Dundas, right on Metropolitan main campus. Now, you got a AAA location. Your steps to a university, literally steps, not blocks. And you're right at a 24-hour streetcar and a 3-minute walk to the Line 1 subway. On top of that, we have shopping, restaurants, entertainment, everything that you want from a AAA location right here in Centricity. Now, people ask me where have I bought condos? Well, I'll give you some insight. I own a condo 1 minute away from here. That should tell you what I think about the area. If you want to learn more, reach out to First Access Condos and let us tell you why this should be your investment for 2023. First Access Condos, don't be second.
Hey, it's Sarah Larby here. Did you know that if you are selling your home or investment property, one of our preferred agent partners will sell it for you for free? That's right, 0 commissions. Head over to our website, everydayinvestor.com, to find out more.
Hey, it's Rav. Welcome back to Everyday Investor. Super excited to have Scott on the show with us. Scott, thanks again for doing this. I want to talk about how people can make money with you. We've always known that we could go to keyspire.com and educate ourselves and, be more of an active investor, although even there you have what you call service providers where people could, invest in some things. But then we also have the Scott McGillivray Fund. How did that come about and what is it?
So the Scott McGillivray Real Estate Fund is a natural progression, sort of an organic evolution of what I've been doing. I've been doing development projects and real estate investing for many years, and people want to get involved in some of the projects that I do. So I created the fund so that we can pool resources, share returns. People get like an ownership stake in the projects that we're doing, and we have a lot of them. I've got several developments in progress and a few on the roster coming down the pipeline as well. So a few years ago, we started the Scott McGillivray Real Estate Fund to allow investors to participate passively, right? Because a lot of people are like, look, I got equity in my house, I've got some savings, or I've got some funds, some registered funds, and I want to put them into something that's got a little bit more of an aggressive return. So we're targeting 15 to 20% returns annually, and that's what we've been providing for the last few years. It's what we're projecting moving forward. And it's a combination of a monthly dividend, basically, so some cash flow being spit off, and then a long-term return, depending on what the project is. Most projects are between 3 and 5 years before they're fully paid out. But ideally, folks are rolling their money over into the next one as more projects come available. But we have 3 projects on the go right now, all at different stages. And yeah, we've got thousands of investors that we're working with. Having that stability of the monthly payouts is nice because you're getting a little bit of a early return there. And then long-term, obviously getting that payout after a few years, it accumulates the other, half of your return accumulating every year. So it's worked out extremely well for both myself and the investors. I've been able to take on bigger projects. I've been able to expedite some of the projects that I've had in my portfolio for a long time. I've been investing for 22 years. I've got hundreds of properties, and some of them have been slated for redevelopment. I've got this one project I bought 20 years ago. I bought these couple small farms in a row, and now they've been absorbed by the city plan. They're slated for high density. I'm like, the investors can get in on the ground floor because we've had this project for so long, and it just makes it more profitable for everybody. So we are taking in both accredited and non-accredited investors now. So that's fantastic. That's really opened the floodgates. We started with accredited investors only for the first year. But now we will take, different amounts. Some people are putting in $5,000. Some people are putting in $500,000. It really just has to make sense as a part of your balanced portfolio.
And I want to rewind and back up because I'm not as smart as you, so I have to work, a little slowly here. But just on that point, Scott, really, so how do we have non-accredited or non-eligible? Is just the way you structured it? Your legal team was able to structure that now everyday people can invest with you and put in as little as $5,000, $10,000, $20,000?
Yeah, originally we started off with our first project. For simplicity, we kept it accredited investors only, but the demand from non-accredited investors was so high. And because naturally I like to give everybody an opportunity. I find it very frustrating that a lot of these private markets work with accredited investors only. It locks out the average everyday investor who's struggling to make big returns. It basically locks them out from getting the types of returns that the institutions are getting, that the wealthier individuals are getting. I remember what it was like to want to invest in projects like this when I was younger, and they're like, I'm sorry, you don't qualify. I'm sorry, which to me is, it's bullshit. So we decided with the fund, we want to make sure that we got to market quickly and we were able to service a good portion of our real estate investors. But now I'm proud to say that anyone can be an investor in these projects, accredited or not. And we have a range of minimums that allows people to have a meaningful position. We want you to have a meaningful position, but get the types of returns that you're locked out of typically from the private markets. You know this, Rav. The private markets have been outside of a lot of the regulations for a lot of time. It is heavily governed, like we are heavily regulated, but most people are stuck to maybe the stock market or a super basic GIC. That you just can't get the same returns as you can in the private markets. So for us, it was as quickly as possible, make sure that we are ticking off all the boxes. We hired the best legal team and compliance team, and I gave them the marching orders. I said, within the first year, we need to be open to accredited and non-accredited. So we are there. So anyone who goes to scottmcgillivraryrealestatefund.com, you can get started. Our team will do the KYCs, that's to know your clients, and walk you through what your options are to make sure that you can participate.
Sure. Yeah. No, I mean, as you know, I work with Graybrook, and you know, we have accredited investors, and I get it. I don't want, you know, Mama Toor to lose her shirt if you know, somebody's saying, "Hey, we're going for gold panning," and so we've got to make sure that we're protecting people, but at the same time, we're saying that the more money you make, the more sophisticated you are, which is not necessarily true. Like, you can have a drug dealer invest in some of these deals and a teacher not be able to. So no, that's very cool, Scott. I appreciate you doing that. So, you know, time flies when we're having fun. We don't have much time. What is a fund? Is it project specific? Are we pooling our money for many projects? How does it differ from a REIT, a real estate investment trust? And you said there was an exit. So how are we, like, if I want to buy and hold and keep it there for 10, 15, 20 years, can I do that as well? Can I reinvest my monthly dividends and not take it? Break it down for a second in the 5-6 minutes that we have left.
Yeah, that's like a half-hour question, but I'll give you the fast version. So I'll start with what is it exactly? Because, you know, I've been buying properties and real estate for 22 years. And that's what I started teaching people how to buy a residential home and multiplex it, how to do vacation properties like we do on the show, how to do multi-units, multi-family. Now we're into commercial and industrial. Like, we do all kinds of what I would call hands-on real estate investing and training. And I teach a lot of that through my master classes at keyspire.com. However, I will tell you that after speaking to hundreds and hundreds of thousands of new investors and even existing investors through the live events that we've done all over this country, I found there was this massive market of people who had access to equity in their home. They had inheritance or they had savings, and they wanted to put it to work, working hard for them in their retirement, helping to fund, you know, any of their big goals. And they didn't necessarily want to be hands-on investors. They wanted to participate and be passive investors, much like you. And they still want to do it in real estate. And that's where the fund organically grew. It's like, okay, well, we have these bigger projects and we have all the people in place, but capital is still required. And we can do conventional financing with the banks, right? We can get 70% of the money we need conventionally, but that other 30% is still tens of millions of dollars on $100 million project. And it's better for us to pool a few hundred investors together. We all participate because we've got equity in it. Our money's working hard, but we've got great returns because the majority of the financing is still done conventionally and affordably. So our returns are exponentially higher. We're not just getting 5 or 8% returns. We're getting 12, 15, 20% returns because we are a profit sharing on the entire project, but we're only financing less than half of it. So this is how the fund works. It's something that institutions have been doing for years. It's only in the last several years that it's been open in the markets for non-accredited investors and even accredited investors. But these private markets have typically been completely absorbed by a small group of people. It's only now that even myself, I've self-funded most of my projects, but that's been something that's held me back from doing $200 million projects. I'm not going to fund one of those by myself. So this has been, it's been an evolution. It's been an opportunity. And yes, people can get in for a small amount or a bigger amount. We've got investors in for a few $1,000,000. You've got investors in for $5,000 to $10,000, right? But it has to make sense.
Yeah. So the return on investment, you're targeting 15 to 20% annualized. Yes. There's a cash flow component, although I can reinvest that cash flow and not necessarily take it if I don't need it. I can get out after about 5 years or so. I'm assuming you're refinancing and paying out investors if they want to get out, or they can stay in. It's not project specific. It's many projects within the umbrella of the fund.
That's correct.
And the difference between the fund and a REIT, probably same thing other than just the way it's structured legally, right? Is that fair to say?
It is different, although our returns can be, with the fund, you can get higher returns. If the project does even better, you aren't just locked in at the rate you were quoted. You can actually do better if there's more profit sharing, which I personally think is good. If the development does well, everybody deserves to win. Typically with a REIT, it's like you put your money into the pool, here's your guaranteed return, or here's your return, and that's all you get. What I like with the fund is that some of these projects go a little faster or become more profitable, and the investors get to participate in that. There's always more projects coming, so most investors will roll over. They're like, all right, I'm going to put it back in, and I'm going to keep compounding my money here. So both opportunities exist.
Great. And then lastly, Scott, obviously, objectively speaking, what is a downside if I just, again, Cousin Vinny has a fund as well. What do we have to be careful about? What's some of the downside when it comes to investing in a fund?
It's a great question. And I always advise people to do their research, look at a company's track record, right? We've got a great track record and a great reputation. We've never missed a payment with any investor, and we don't plan on it, obviously. And I personally put a lot of time and energy into picking only the best projects. A lot of, even just recently we closed down, we oversubscribed, and I said, stop, we're not taking any more money because I'm not getting into another project just because we have money coming in. We're only going to raise funds when we have the best projects because we want to get the best. I'm the biggest investor in my own fund, so I would like to make sure that I'm securing myself the best returns as well, along with everybody. So if a project isn't going to make our target, we won't raise capital, and I'll move on until we find the right project. I'm thankful that we have 3 projects in the pipeline right now, and then a 4th one that we're analyzing right now. So we do have availability, and we opened up the fund again to raising capital a couple of weeks ago. But once we meet our requirements, I'd rather close the raise and stop raising capital, because I want to focus on making sure that the returns are always there, right? It's not about raising all this capital and then doing a bunch of bad projects, which a lot of companies have to do because they're trying to make fees and all that. But I'll be honest, I'm doing this to help finance some of the biggest and best projects that I know exist. I am the biggest investor in the fund, so I also want to make sure that the returns are healthy for myself. And so here we are. My advice is make sure you do your research, ask lots of questions, and do whatever you're comfortable doing. Maybe you want to try a small amount first, and if you get what you're looking for, you can increase from there.
Love it, Scott. Time's up, man. When we're having fun, when we're learning, thank you so much for always being a great educator. Thank you for being, a mentor in a real way to me, and also being a friend. Much love to Sabrina and the girls, and can't wait to have you back on the show. Thank you.
Thanks, Rob. Really appreciate you and appreciate you helping people understand how to navigate real estate because it can be a tough space.
And thank you. Without you, we would not have a show. Remember, you can watch this show and others by going to our website. It's kind of like watching on demand. Of course, we'll see you next week. Same place, same time. Honey, I love you. I'll be home soon. Thanks for watching, everyone.